Oh, I think streaming is a form or a source of capital in the mining industry, and it competes with debt and equity. And so when you see periods like this, when debt and equity are tougher to come by, it puts the streaming model in a good position. So lots of opportunities, lots of interest in the streaming model. These are the times that we have to sort of build our foundations and move ourselves forward. So yeah, very good times right now. I've given up on predicting bottoms. What I am predicting and what I do expect, or what I am confident on, is that we're in the bottom half of the market. To pick off a bottom itself is pretty challenging. That's a single point in time, and so I think when I look at this, when I see the costs of production getting as close as we are, fourth quartile producers getting impacted, we've got to be close to the bottom, and definitely in the bottom half. Yeah, it's exactly what we feel, and it's not just London. I've just spent the last week marketing all through the east coast of the United States and into Canada and Toronto, and we get the sense that there's people positioning themselves. I think everyone's just wants to know where to go and which are the right companies to be into. I'm not getting a sense of action yet, but I'm getting a sense of setting themselves up and preparing themselves going forward. I'm sure it's going to be one mistake or something that happens on the fiscal side, and all of a sudden you're going to see a rush back into the precious metal space. Oh, most definitely. I mean, the most important criteria for us is operating margins, right? We want to make sure that on an operating basis, the assets are in the lowest half of the cost of the respective cost curve. That operating margin, that high operating margin, gives these projects capacity to continue producing metal through the highs and the lows of the commodity price cycles, and manage their way through various other impacts like tax increases and such like this. So it is the most important criteria that we use to judge our investment choices within Silver Wheaton, is high operating margins. Well, I think you have to show, right now capital efficiency is one of the most key words in the industry, or key trends in the industry, and it's show that you're not chasing just metal, you're chasing profit, you're chasing return. Traditionally the mining industry is all about sort of maximizing the ounces produced, and I think what we've seen is a real trend over the last couple of years, much more of a focus on actually generating a return on those ounces, or a return on those pounds of copper, and keep on driving that, those improvements. As again, it's not chasing metal, it's chasing profits. My predictions are the streaming model is going to continue to have opportunities to invest into good quality projects going forward. The sense I get is that it's probably going to be flat for a while. We may see a little bit down. It is definitely an emotional market, but pretty bullish long term. Still very bullish on a long term basis. And so I think these are the times that, as I said earlier on, these are the times that companies like us build our asset base, build our portfolio going forward, and take advantage of these opportunities when they're there. For a company like ours, we're out looking for opportunities at the same time. We're here on a corporate development basis, along with trying to reach out to investors and potential investors and such. And so, the one thing that I am impressed, I walked the floor this morning, and there is quite a good collection of companies out there. It doesn't look like the mining industry is dead yet. We're still doing okay.